Big news for Bitcoin as we see Bitcoin hitting some of its lowest volatility on record. We also have some interesting revelations out of BlackRock analysts. I also want to discuss with you some really big investments, making money by investing in the future, basically, and some of the biggest investments and trends that we're going to see in technology throughout this decade. Early buyers will get too rich. It's true. It's true. I hope it's true anyway. And also, I want to discuss with you Worldcoin, the Orwellian dystopian Worldcoin, as well as the coming CBDC nightmare. So it's going to be an upbeat podcast, an upbeat conversation today with you. So make sure to stick around for all of the goods. I'm excited to see all of you here, of course. And we're going to be diving into some great conversations today. So let's go ahead and get it. Let's start with this. The big news right now for Bitcoin is the utter lack of volatility, which makes me think we're probably in for some volatility in the not so distant future. But have a look here at this chart. This shows the Bollinger Band width currently down at 20. This is one of the lowest, if not the lowest, recorded reading for the Bollinger Band width on the weekly charts in Bitcoin's history. In fact, I think the previous low was 21. So that means essentially that we are in a period of very, very low volatility. And of course, as you have known, if you've been around the space for the last few weeks and you haven't been in a coma or sleeping on the beach or something like that, Bitcoin's price has done almost nothing for 6 weeks now. Complete lack of volatility, daily trading ranges within the hundreds of dollars sometimes. Absolute craziness. That means the volatility is coming sooner than later. Doesn't necessarily mean it's upside volatility. Upside volatility would be fantastic. It could be downside volatility, depending if we get some shock from the Fed tomorrow, for example. But let's say everyone right now is expecting the Fed to raise interest rates tomorrow by another 0.25%. What if they don't? What if the Fed comes out and says, hey, you know what? Enough's enough. Inflation's down enough. We're not going to raise rates again. In that situation, things get pretty exciting pretty quickly, and that could be upside volatility for Bitcoin. But one thing is sure is that volatility will be coming. This is what the Bollinger Bands tell us. The Bollinger Bands basically imagine it like a rubber band getting tighter and tighter and tighter and tighter and tighter until it just snaps. We're getting close to the snapping point. Don't know how long it's going to be exactly, but we're getting close for sure. I want to share this with you as well. Fundstrat Global Advisors, Bitcoin get to $108,000 before next year's halving as BlackRock's ETF will drive demand. Now, this prediction by Fundstrat has been shared around a few times already. $180,000 before next year's Bitcoin halving. That's a big, big call, as Kevin points out here. If that were to happen, he says, is Tom Lee out of his mind? If that were to happen, Bitcoin would basically need to go straight up from here until the halving. I mean, we're at $30,000 now. We're going to add $150,000 to the price of Bitcoin in 7-8 months. Sounds great. Makes a good headline, of course. Gets Fundstrat's name in the papers. People love big, bold price predictions from these different investment firms. But $180,000, in my opinion, is not a super realistic prediction. I'm not saying it can't happen, because this is crypto. One thing that I've definitively learned about crypto is that anything can happen. However, it doesn't seem very likely it would break the 4-year cycle, which the 4-year cycle will get broken at some point. It's been an interesting model so far, but at some point, the 4-year cycle will become completely invalid. However, this would break the 4-year cycle, maybe earlier than it would break. The BlackRock ETF, if it gets approved, is probably going to be quickly followed by the Invesco ETF, the ARK ETF, the Fidelity ETF, the Bitwise ETF, whoever else is trying to get an ETF. Somebody else will probably come in and get an ETF. It'll be an ETF party. That'll be very exciting. And we will see more institutional money come in via these ETF products. But the major amount of ETFs, we do have our first potential refusal from the SEC in about 3 weeks. That's for ARK's ETF. The final decision time period for the ARK ETF, I think, is December. Most of the Bitcoin ETFs that are in right now, they have their final approval or denial date in March next year, which is right around the time of the Bitcoin halving. The SEC could draw this out for a while. They don't have to immediately approve a Bitcoin ETF. I know we all got very excited. I'm still very excited about the potential for Bitcoin ETF to pump all of our bags. But I am not so certain about 180K by the end of the year. I would love to be proven wrong. I will just put this out there. If Tom Lee at Fundstrat is right and we do get $180,000 Bitcoin this year or before the Bitcoin halving, maybe he gets January or February next year. I'm here for that. I'm here for being wrong and Bitcoin blast into 180K before the Bitcoin halving. I'm all about it. I just don't think it's the most likely scenario, to be honest. But hey, crazier things have happened without a doubt in these markets. Now, before we get into some of the other things from BlackRock, as well as some of the big things affecting the market this week, just a quick reminder, if you are a trader, you need yourself an account over there on BYBIT. It's the best place for trading cryptos at. So if you want to long Bitcoin, if you want to short Bitcoin, it is the place for you to do it. They've got great spot markets as well for their altcoins. And of course, very popular copy trading. Use that link down below in the description. Get up to $30,000 in trading and deposit bonuses. So check it out if you are a trader. Now let's take a look at this chart here. This is from Bar Chart. They said the S&P 500 right now is trading 12.2% above its 200-day moving average and is clearly overbought, with RSI currently over 70. However, and this is very, very interesting, so listen up. However, since 1970, 8 of the 12 times that the S&P 500 was 12% above its 200-day moving average, it ended up trading to 20% higher. That's according to data from Fundstrat. So that's historical looking data from Fundstrat. Not crazy price predictions about 180K Bitcoin before the Bitcoin halving, which, hey, maybe they're right, but I don't think it's the most likely scenario. This is them looking at historical data and saying this is what has happened previously. So it's very interesting. So even though the S&P 500 is 12% above its 200-day moving average, people are saying, wow, it's all overbought. There's too much greed in the stock market right now. We need to cool off, man. Historically, it hasn't cooled off. Historically, markets have rallied another 20% or up to 20%. So we shall see. We shall see. There could be some more fuel in the tank here for the tech rally that has been going on in the stock markets, because there's a tech-led rally by all means. And I think the decade will continue to see a tech-led rally for really all markets. But that's a different conversation right there. But a bullish stock market could do well for the crypto markets because it means that a risk-on attitude continues. And while we've seen all these stocks hit new all-time highs, or they hit new 52-week highs and all this kind of stuff, crypto's been really lagging behind, partially probably because of the SEC and all that malarkey going on there. This is an interesting. British Hodl shared this. 3 analysts at BlackRock published a study on Bitcoin back in 2022. The study concluded that the most ideal optimal risk versus reward portfolio is heavily Bitcoin, 85% Bitcoin, 9% stocks, 6% bonds. That's very different from the 60% bonds, 40% stock portfolio that's often bantered about as being like the safe allocation. And even here in the crypto space, more specifically, we've talked quite a bit about what's a good allocation for the average Joe Blow investor who wants to get some exposure to Bitcoin, but still wants to maintain some of their traditional portfolio. Even 1% allocation to Bitcoin has seen that 60-40 portfolio holder significantly outperform the 60-40 portfolio. So they do 59-40, for example, or 59.5 and 39.5. Just 1% Bitcoin allowed them to dramatically outperform other people holding the same kind of portfolio. An allocation of 2, 3, 4, 5% saw dramatically outsized returns for investors by only getting exposure to Bitcoin, nothing else in the crypto space. Throw some Ethereum or something in there, you're going to get even bigger potential returns. but just Bitcoin. So maximum 5% portfolio risk, 60% bonds, 40% stocks. So maybe you dial that down to 57.5 and 37.5, 5% into Bitcoin. Dramatically larger returns came in for investors in this situation while only risking 5% of their portfolio. Though these analysts from BlackRock saying basically just ape hard, ape into Bitcoin, ape like there's no tomorrow. You got to wonder about the BlackRock game here. Now, these are just analysts from BlackRock. This is not Larry Fink coming out and saying ape into Bitcoin, guys, although he's kind of been saying ape into Bitcoin, guys, just not in a much more subtle way, right? The Larry Fink kind of way of saying ape into Bitcoin. But it is pretty interesting to think about. I mean, global wealth, hundreds of trillions of dollars, even a tiny percentage of that money coming into the markets is going to be big. But I would also just like to reiterate here, BlackRock is not to be trusted. BlackRock is a market manipulator, right along with JP Morgan and Goldman Sachs. And seeing all these guys, all these organizations pumping up Bitcoin, talking about Bitcoin. I mean, it's such a double-edged sword. On the one hand, it's like, yeah, cool, BlackRock's here, and they launched their Bitcoin fund for the private clients last year. Very convenient that they did that before even trying to pursue a Bitcoin ETF for the retail public. I mean, I guess they need their exit liquidity when the time comes, right? BlackRock's smart. They know how to play the game. But here we go. BlackRock's here. All these institutions are here. They know how to manipulate markets. They have a long history of manipulating markets. I mean, look at JP Morgan, experts at manipulating markets. They manipulated metal markets and Forex markets and basically every market around the world. And I have not forgotten about that cocaine boat, JP Morgan, the $1 billion in cocaine in that boat. Come on. The internet does not forget, my friends. Anyway, these organizations coming in, exciting, bags in a pump, probably not to 180K by the end of the year, like Fundstrat seems to think is some kind of possibility, but it will pump when those Bitcoin ETF approvals start coming through, and we will see big demand coming in from institutional players and the people whose money goes into the funds at BlackRock and Fidelity and other places. So definitely something to keep our eyes on as investors because it is a major market moving event. Interesting, too, Morgan Stanley's Mike Wilson finally admits that we were wrong about 2023's stock market rally. Now, Mike Wilson has been saying basically all year, sky's falling, everything's going to go down. He's refusing to throw in the towel, saying that, yeah, well, I'm not a bull now. It's less time to be a bull, right? Markets have rallied significantly, and we might see markets go on to get a new all-time high. But after such a big rally, irrational bullishness becomes actually a riskier proposition if we're talking about how markets actually work, right? Though it is interesting to see some of the biggest bears on Wall Street finally capitulating. But is it all psyops? I have to wonder sometimes. Everything's psyops, guys. U.S. consumer confidence hitting a 2-year high, although recession fears do linger. This is something very interesting because in spite of the best efforts by the Federal Reserve to crush the economy, to crush small businesses, to make you lose your job, to make you lose your home, to make you lose your car, to make you lose your kids, to make you lose your dog, to make you lose everything and sleep under a bridge. That was Jerome Powell's intention. Basically what they said. We have to cause some pain in the economy. Pain in the economy means all that stuff for you. Not for Jerome Powell. I mean, he's getting paid big time. Not for his buddies. The richest neighborhood in the world is just outside of Washington, D.C. Funny that, huh? Where'd all that money come from for those people? It's your money in their pockets. Anyway, I digress. The economy in the USA remains stubbornly resilient. The equity markets remain stubbornly resilient. And we are on, of course, the eve of the Federal Reserve looking to raise interest rates once again, potentially to a 22-year high from 5 to 5.25%. That is what everybody is expecting tomorrow. Everybody's expecting that raise to come in and for another hit for the interest rates. Although we'll be watching very closely. Although the market is currently pricing like a 99% chance that there's going to be a 0.25% increase to the interest rates tomorrow. The interesting thing is that we could potentially, people are starting to speculation. People are starting to speculate that tomorrow could be the final interest rate hike. Although the Fed has previously said expect 2 more interest rate hikes of 25 basis points or 0.25% each, which will bring us up to 5.5%. Tomorrow could be the last one, realistically. Inflation came down another percentage point last month from 4 to 3%. What happens next month if inflation comes down another percentage point or a half percentage point? I mean, if it comes back down to 2% next month, and it could, we've had 2 months now of dramatic drops for the inflation rate. So if inflation comes down again next month, dramatically so, the excuse, the reasoning behind the Fed bringing in yet another interest rate hike wouldn't even make that much sense. And so if the Fed, if Jerome Powell signals or seems to indicate more dovish language, maybe he doesn't say, well, we're not going to raise next month if X, Y, and Z happen. He's probably not going to say it like that. But even if he says some more lighthearted comments around a future raise or potentially slowing down, aka pausing rate hikes, that could put the sales back in the market, setting the S&P 500 up to a new all-time high, the NASDAQ up to a new all-time high, and Bitcoin probably to keep ranging at $30,000 forever, because that's what it does. Now, I want to switch up conversations here. I want to talk with you about the biggest opportunity of our lifetimes financially, to make a fortune by investing on the future. Because the way I look at it right now, my opinion, what I'm seeing at the moment is that this decade is probably going to be one of the most insane decades ever in terms of being an investor in these markets and making crazy amounts of freaking money as an investor in these markets. There are so many different sectors that have this potential technologically to revolutionize the world that we're in right now. And for investors who are getting in there to make huge amounts of money. This is AI, this is crypto, this is electronic vehicles, this is robotics, as well as other technologies, which you can't really invest in per se, but do have massive impact potential on how they're going to affect and change society, like CBDCs, as an example, and many others that are coming. Serious disruption to our way of life is coming. Economies are going to be reshaped dramatically, in a way more dramatic than we've seen at all in our lifetimes thus far. And look, if you're a millennial like me, you've seen wild change. Now, if you're like 18 or 19 and you're watching this, shout out to the 19-year-olds watching the broadcast. You guys are switched in and well ahead of your peers. I will tell you that right now. So if you're investing in this space, slay it, guys. Slay it. Make that cheddar. Now, the thing is, you've grown up in a world where we have the internet, for example, and we have social media and all this stuff. Me, back in the 90s, dial-up internet, man. I remember my first internet connection was web TV. Shout out to anybody who remembers what the hell web TV is, where you plugged an internet box into your television and you had like green text on the screen, and it was pretty low tech, but it worked. It worked. It was a good time. I was wheeling and dealing Star Wars and Magic cards when I was like 13, 14. It's a great time. But that was the internet back then. Somebody could be on the internet, but you couldn't use the phone at the same time because you're using the phone line, the land line, the thing connected into the wall. I feel like a grandpa here talking about this stuff. Geez. Well, we've gone from that to supercomputers in your pocket, aka mobile phones. We have artificial intelligence technology that's already here and operational that is crazier than anything a lot of us could have imagined 10, 15 years ago. Payments, I mean, crypto's less than 15 years old. And Bitcoin, of course, just being the first one. Ethereum's 7 years old, something like that. It's really only been highly functional and operational and useful for 4 or 5 years. We're still really early on this technology. And much in the same, if you went back to the 90s and you were heavily investing into, Amazon and Apple and whatever other early technologies were coming out back then. And of course, a lot of them went to zero, as we see with the altcoin space. A lot of them will go to zero. But some of those early investments went on to make unbelievable gains for investors over a 20-year period. But here's the difference is that the technology curve, the adoption curve of technology is moving so much faster. 20 years ago, things moved a lot slower because we didn't have the advantage of the last 20 years that have happened, the 2000s, where all this technology has spread, where everybody's got the internet in their pockets now, where everybody has this massive connectivity across social media, across financial apps, the ability to send money, receive money, to buy things, to spread messages and all this stuff instantaneously around the world. It's a very powerful thing. And it means that the technology that is coming forward for the next, 7 years of this particular decade that we're in, the 2030s, I think will be a very watershed moment for our society. The 2030s, when they happen, will be the rollout of this technology across the world will be massive. The time to be an investor is like now, and it's very exciting. And of course, there's always going to be fun, exciting stuff to invest in. And there's always going to be money to be made and all this stuff. But I think technologically, this is an incredibly exciting time to be living in the world, because much in the same way that we go back again to my analogy from my story from the 90s, where I was a young kid growing up, and then it was like the dark ages one day, and then we got the freaking internet, man, and everything changed. Everything changed. The way I thought about the world, my connectivity to the world, I had friends on chat groups in Finland and Sweden, and it was crazy. That kind of mass awakening moment technologically is here with artificial intelligence and crypto and a few other things. And those investment potentials can be pretty damn big, if you ask me anyway. So, for example, let's talk a little about AI, just a few of the big ones. Here. So, Price Waterhouse Cooper, so they say global artificial intelligence in their study. So they say this could be a $15.7 trillion potential contribution to the global economy by 2030, up to a 26% boost in GDP for local economies from AI by 2030. 300 plus use cases identified and rated are captured in their AI Impact Index. Yo, that's big. That's big. That's a lot of money. 26% GDP boost from just AI. So that means the companies, the tech stocks, or even some of the crypto coins, there's quite a few crypto coins, some AI crypto coins that are actually doing things. We have Render, which is a decentralized computing network. We have some other bigger AI players out there, whether it be Fetch or Singularity, and they're actually doing stuff. Now, I can't comment on the token price or tokenomics or any of that stuff, but these are companies that are actually doing things. So they are potential players if you want to go crypto route to getting AI exposure. If you want to go the equity route to getting AI exposure, there's probably a lot more opportunities there to invest in more salient, real technology and companies. But I think we're going to see an AI bubble where we have a lot of crap companies. AI.com, the company, it'll be like the pets.com. They won't really do anything, and then they're going to go bust. We'll have lots of that kind of stuff. But we're also going to have the next Amazons and all these kind of things that are going to take off and be the next big players. Companies that may not have even been launched yet. They're going to be launched over the next 4, 5, 6, 7 years. But AI is going to be massive, and it's a massive opportunity for early investors to get in on. And this is interesting. So this coming from an article over here on LinkedIn said a joint report published by Dell and the Institute of the Future states that 85% of all jobs that will exist in 2030 have not been invented yet. That's insane. And this, I think, comes back to one of our core fears about AI is that AI is going to take my job. Or take our job. Took my job. Took my job. Yeah, AI is going to take a lot of people's jobs. A lot of people's jobs. However, it's going to take away boring, mundane jobs that people probably hate doing anyway, and allow people to do more interesting jobs, different jobs, maybe live more of their real life passions versus digging ditches or flipping burgers at McDonald's or some other stuff. It's going to be a bit of a learning process for everybody as people need to reskill for the new economy. And by the time you're done reskilling, technology might have already replaced your skill. It's going to be hard, but it's going to be a crazy period as well, which is why investing in this space becomes so exciting, because you don't have to worry about necessarily retraining yourself for a new job. You can just invest in the companies that are going to take everyone's jobs. That's one way to do it. Which takes me on to talking about electric vehicles. So EVs can make up more than a third of the global car sales by 2030. That estimate, by the way, is based on current realities of legislation. So this envisages that in China, we're going to see 62% of car sales in 2030 be electric. In Europe, 58%. In the USA, 50%. Worldwide average will be 35% at the time. India, 15%. And the rest of the world will be 10%. So it's pretty interesting numbers. Now, some countries, for example, they have already legislated for electric vehicles that by 2025 or 2030, only electric vehicles will be sold in our geographies. So you have some of that, right? Not everywhere. We might see more announcements over the next 4 or 5 years, and that makes it even a bigger potential for the electric vehicle market. And electric vehicles are very exciting. I own an EV. I love my EV. I got a Tesla. Absolutely great car. Love it. Love it. Absolutely. But what's even more interesting about electric vehicles, I mean, yeah, they're nice and clean, of course, depending on where you source your initial electricity from. This is one of those weird conversations where you're like, yeah, okay, I've got an electric vehicle, but we're powering it with a coal-powered power plant. Slightly problematic. See, where I live, we actually have the city almost exclusively powered by wind and hydro energy. So it's actually a great thing to have an EV because it's no emissions coming out of the car, no emissions from electricity. Yeah, okay, I know you still need some kind of stuff to create anything. You gotta dig the steel out of the ground to make whatever. I get it. You can't create anything without destroying something else. I understand this. But think from the EV perspective, all these EVs on the road, Tesla's self-driving technology is only getting better. You can now use Tesla self-driving technology to be able to drive in the cities. And if you have Tesla self-driving technology for city driving, that opens up the potential for every Tesla or every car using Tesla's self-driving software. And I see that a major car company just announced that they're going to be integrating that recently. That allows for everybody's car to become a robo-taxi. That's a big implication. We're talking about changing of our cities. Our city's infrastructure can change. Suddenly, your car can just drive back home. Doesn't need to park somewhere where it's going to be charged $100 or $50 or whatever it's going to be to park your car for the day. Just go back home. Our cities are going to change. The way we make money is going to change. And yeah, we're going to need to do a lot of things in order to get to the stage. We got to upgrade our grids and bring in more energy, and probably going to need a lot more nuclear energy, all this stuff. These are all problems to be solved. We are a pretty clever species. If you haven't noticed by now, we will solve some of these problems. And perhaps one of the biggest revolutions that is going to take a lot of this is going to take our jobs. I got my job. I got my job. It's all getting a pile of dudes, guys. All right. Seriously, though. One of the things that's really, really going to take people's jobs is going to be the advent of self-driving semi-trucks. Huge implication for electric vehicles and self-driving technology, because you're not going to need to have truck drivers anymore who can only legally drive 10 or 12 hours a day. You can have a self-driving truck that can drive 24 hours a day. Suddenly you don't need to pay a driver $50,000 to $100,000 a year. I don't know what truck drivers get paid. I imagine it should be pretty well, though. Let's say $100,000 a year. Is that $100,000 a year job? You don't need to pay those guys anymore. You also don't need to buy expensive diesel anymore. You can charge up your semis with cheaper electric. So this becomes a revolution in transportation, which has a deflationary effect on the economy. It means that the consumer goods that you can purchase can be cheaper. It means that packages can arrive to your house quicker. It means that food can arrive to your local supermarket fresher and quicker and cheaper. It's a revolution. And it's going to take away hundreds of thousands to millions of jobs. I remember seeing a statistic somewhere that something like 10% of jobs in the United States exist around the trucking industry. And look, we're still going to need trucking engineers, at least for a while, until robots take that over. We're still going to need trucking engineers to change tires and replace batteries and all these kind of things. But a revolution is coming, and it's going to make a lot of money for early investors. Just going to say that. Robotics as well. This is going to be a $500 billion industry by 2030. That's according to the guys over at Global Data. Tesla, of course, getting into the robot game as well. I know they're pretty clunky right now, but I have faith that the world's richest man is going to get some pretty sweet robots out here for us at some point. These are early iterations of the technology, but the technology right now is here for the artificial intelligence. It's here for the self-guiding, and it might be early stages, but we're going to have these domestic robots working in factories, working in people's homes, and all this kind of stuff sooner than you realize. And Tesla's not going to be the only company doing it. Lots of companies doing that. Robotics are going to absolutely explode everything. We're going to have delivery drones and all that kind of stuff. This is the future that's coming. And again, you can invest in that future or not invest in that future. In the same way that you can look back, people who invested in the future of electric vehicles back when Tesla first came out made a killing. And of course, Tesla and other companies will go on to get even bigger still. Then we have things like new technologies, new therapies, new cures for diseases. This is something I think is a very, very interesting niche of new technology that's developing. Tony Robbins wrote a great book on this recently. Gosh, the name eludes me right now, but it's Tony Robbins' new book. I think it's called Life Force, actually. Fantastic book. He goes over and talks about all these new technologies that are coming out. And some of this stuff is like mind-blowing technologies. And in the book, he says, basically, if you can live another 10 to 20 years, your chances of living much exponentially longer are becoming much more real because the technology is moving so fast in terms of therapeutics and curing diseases and catching diseases early and all these kind of things. It's a very exciting time, once again, to be alive. It's something that back in the 90s, we simply didn't have. I mean, yeah, great. Medicine back in the 90s is a lot better than medicine back 100 years ago. But medicine today, and where medicine's going to be in 10 years, is going to look nothing like medicine of the year 2000. ARC's research says that precision therapies could appreciate at a 29% annual rate. 29% annual rate. Yo, 500 billion in 2022 to 3 trillion by 2030. And what's that put it at by 2040? Not going to be that old by 2040. My investments could still be in my pocket, making me truckloads of money. I actually don't have much exposure stock-wise to therapeutics right now. I own some CRISPR stocks. I own some ARC stocks as well that are exposed to this. But I'd like to get some more. I think it's a very interesting area of investment potential. Something I've been looking at a little bit more. The robotics and all stuff, that's fun, right? But curing the world's diseases, helping people live 20, 30, 40 years more and in good health, how much would people pay for that? Crazy amounts of money. And of course, we got to talk about crypto because we want to talk about making money in the future. It's crypto, baby. We know this. We know it. Crypto is one of the fastest horses. ARK Invest coming out again with their $1.5 million Bitcoin price prediction. I love it, Kathy. Kathy, the relentless Bitcoin bull. I totally dig it. Now, how does she get to such a wild number for Bitcoin by 2030? By 2030. Well, I like their Bitcoin price target math here. So in the most bearish case, they see Bitcoin getting to $250,000 by 2030. So if my Bitcoin, which is worth $30,000 today, gets to $250,000 by 2030, I'm pretty happy with that. That's what, like an 8x or something from here. I'll take it. It's cool. That's fine. Their base case, right? The neutral case here, $680,000 Bitcoin by 2030. 2030 is not that far away, guys. It's 6 years. I mean, come on. Come on. You can't hold an investment for 6 years. Kids these days. No, look, if you need to sell your Bitcoin in the next cycle, that's fine. In fact, I'll probably take a little bit of Bitcoin profits off and then sling it back into Bitcoin back at the next market bottom. But that's a swing strategy, right? Their bull case, of course, $1.48 million for Bitcoin by 2030. Now, that assumes that we are going to see Bitcoin rise to prominence in global remittances, that we are going to see nation state treasuries adding Bitcoin, that we're going to see it as an emerging market currency. Now, that could see a role in the BRICS nations, that could see a role beyond countries like El Salvador, for example, where we're already seeing it actually starting to operate. Maybe we're going to see more prominence for Bitcoin in Africa, for example. We're going to see a rise of Bitcoin as an economic settlement network, probably at layer 2, using the Lightning Network. We're going to see more institutional investment. I mean, look at BlackRock, look at all that news. We see the institutional investment narrative building up. We see the digital gold narrative building up, et cetera, corporate treasuries. So the math to get to $1.5 million Bitcoin, it's not that crazy considering there's only 2.2 million Bitcoin currently available on all exchanges for sale. And that just what, 70, 80 billion dollars is going to buy all of that Bitcoin, which like for BlackRock and Fidelity and Invesco and all these companies is like a drop in the bucket of money. It's not even that much. You know, family offices, Middle Eastern sheikhs, everybody and their mom is going to want some Bitcoin. And the total amount of addresses just keeps going up. Total amount of Bitcoin on exchanges just keeps going down. The technology keeps being adopted. Exciting times for cryptocurrency holders. And of course, we're going to have other things that like Elon Musk's new X application, which he wants to make into a giant payments app. He said he thinks he can capture half of the world's financial activity, which is pretty damn bullish, Elon. I don't think they're going to let you do that. Remember, they shut down Facebook because they thought, well, Facebook's going to have too much power. So I don't know how much Elon's going to be allowed to do with his X app, but he certainly has big intentions for it. And I think crypto is going to be a part of that. Everyone, of course, speculating on Dogecoin being a part of that. I think we see Bitcoin become a part of that, probably some other cryptocurrencies, and that brings in hundreds of millions of users. And of course, if his plans for X do move forward as he wants them to, the user base of Twitter, well, the artist formerly known as Twitter, now known as X, is going to be a lot bigger than the 400 million monthly active users that it currently has. So there you go. Lots of exciting times. This is what I'm looking at. This is where a lot of my money is going. A lot of my focus is going on these kinds of investments in electric vehicle technology and medical technology and crypto technology, obviously giant crypto portfolio. But that crypto money will slowly but surely over time migrate its way over into equity stock money, tech stock. So that's where I'll be looking to put some of those profits, especially during the next bull run. Now let's change tack a little bit and talk about, well, New World Order coin, the World Economic Forum coin, the Orwell coin that has just been released by the founder of OpenAI, Sam Altman. He's also got a crypto coin, and it's called Worldcoin. And they've got this sweet little orb thing that they scan your eye with. And if you scan your eye, they give you some sweet tokens. Somewhere, wherever Orwell's buried, he's rolling over in his grave, isn't he? Just going like, I warned you guys about this. Why did nobody read the books? Come on. But look, digital IDs are coming, and how we do our digital IDs is going to really be important. Because look, OpenAI and ChatGPT, I mean, ChatGPT has already shown itself to have strong political biases built into the machine. If we think about the potential for, well, WorldCoin and its iris scanning and the ability to really catalog all the people in the world, which of course they're already doing in a lot of ways. Let's be real about that. But It seems just such an Orwellian project. Now, look, it's very easy to say, hey, look, this is definitely World Economic Forum, Klaus Schwab kind of stuff right here. And look, a lot of people, at least in the crypto community, and I imagine if we ask outside of the crypto community, if you say, hey, can I have $50 to scan your eye? Basically, everybody and their mom would line up to give us that scan, unfortunately. But at least in the crypto community, 48% of people saying, no, it's an invasion of privacy. I'm not going to do it. Only 15% saying, yeah, I like money. Scan my eye, give me the cash. Let's do it, which is fair. Everybody's allowed to make their own decision when it comes to this kind of stuff. And of course, 37% of people saying, hey, Orwell tried to warn us and we didn't listen. We didn't listen, or we did listen, but unfortunately we did listen. And the smart people, you guys listening to this, listen and go, went, wow, that's a big warning. We should be afraid of big tech tyranny. And then big tech and big government all got together and went, oh, this is like a handbook on how to dominate society and screw people over. It's not the message that 1984 was trying to send out, politicians. Come on. I like Raoul Pal's thoughts on this here as well. He said on Worldcoin, no view on the token, but 60% of the people on here already use Apple Face ID. 90% gave all your private data to Google and Meta. He's absolutely right. And you gave it to them for free. At least Worldcoin's going to give you some money for your iris scan. These other guys just took your data and sold it off to third parties. And of course, keep your passwords and email addresses and phone numbers and all that stuff on crappy centralized data banks that get hacked all the time, and all your data gets leaked onto the dark web. And it's a good time, isn't it? It's a good time. Raul says you also have a passport, global entry, credit card, mobile phone. Everything's captured on CCTV all the time. You have medical records, etc. All that being centralized. It says also India rolled out retina and fingerprint scans for payments a few years ago, and it's pretty incredible. You can literally buy a pint of milk with just a fingerprint, no phone, no wallet, no cash. It is possible right now in India, which is pretty cool. We definitely need digital ID for humans urgently, and Worldcoin is just one answer. There'll be many, but it is vital. The next step is fully decentralized versions with ZK-proof technology. I think that privacy technology becomes absolutely critical, absolutely critical. But WorldChain is another example of how blockchain changes everything and how it gets to 1 billion people. And he's right. He's right. Look, the reality is that a lot of people already give out a lot of information to a lot of tech companies, and basically everything is already known about you. So for the niche of privacy enthusiasts who only own Monero and don't want to have their iris scanned, it's a tricky proposition because anytime you go through an airport, they scan your iris, don't they? Yeah, they take the face scans. They take the pictures. They know who you are. It's hard to escape this technological tyranny that we have built for ourselves around the world. And the world governments do want to know where you are, what you're doing, who you're hanging out with, what you're saying on the internet, where you're spending your money. It's all part of the same stuff. It's all part of the same stuff. But much like BlackRock coming into crypto, the fringe benefit of something like Worldcoin, if it does get adopted, if it does take off, is that, hey, at least it gets a bunch of people in the blockchain. They'll come in and they'll get their 50 free bucks of Worldcoin and then hopefully dump it and buy Bitcoin. That'd be great. That'd be great. Here for that. I'm here for that. That'd be fantastic, I guess. The reality is, though, we do need digital IDs, but we need digital IDs that are not going to basically put digital slavery onto everybody. We need digital IDs that are protected with technological privacy features. We need digital IDs that are really decentralized and not in the hands of governments. So, is Worldcoin the answer to that? I don't know. I don't know enough about Worldcoin to say if it is or not. But certainly these technological advances will hopefully push us in the right direction. Hopefully enough people make their opinions known that, hey, I'm all about having a digital ID, but I don't want to sign up for digital slavery. Slavery on the blockchain. That's the real innovation, guys. As Kyle points out here, let's experiment. Participate if you want. Don't participate if you don't want. That's responding to Chris Berniski's tweet that not informed enough to have an opinion on all the nuances of Worldcoin, but I will say that's a new at-scale experiment being run on blockchain systems, part of a new product cycle that will become even more clear into 2024 and 2025. And he's right. And he's right. We will see a lot of new iterations of different technologies coming out on top of blockchains. And really, you do need a blockchain to have something like Worldcoin on. You need a privacy-preserving blockchain. You need the kind of blockchain technology that allows for you to have complete privacy and control over your data, but allow for verifiable authenticity. So I give the beer example. You want to be able to walk into a bar and have the blockchain prove that you are you and you are 21 without needing to hand your driver's license over to the bartender, who might be a creep and who remembers your name and address and stalks you on Facebook later, or looks at if you have an address on your driver's license, shows up at your house at 2 a.m. I mean, not saying that's happened to me, but probably to somebody somewhere, right? Those are the kind of privacy concerns you have, though. Whereas with the blockchain, it would just, you come in, scans your eyeball or your fingerprint or whatever, and it just says, this person is who they say they are, and they are of the legal age to drink. Interesting. These are the kind of technological advances that are going to be a positive thing, but it's so easy to get it wrong. It's so easy to get it wrong. And we know everything we know about the last few years in human society and what governments and major corporations have done. I don't trust them. You shouldn't either. Now, before we talk about CBDCs, the pinnacle of slave money, just a quick reminder, if you're not signed up to the Wealth Master newsletter yet, check it out. It is the best newsletter in crypto. Every single issue, jam-packed, full of value. We talk about altcoins. We talk about DeFi. We talk about airdrops. And some of these airdrops have made some serious money, folks. So check it out. It is free 3 times a week to your inbox. Link in the description where you can join over 75,000 weekly readers of the Wealth Mastery Investor Report. So check it out. Now, let's talk about CBDCs, the ultimate form of slave money. And they are coming, and there's nothing you can do about it. CBDCs are scary, and basically every country is doing them. Now, this is about Russia. Putin signs the digital ruble bill into law, priming the Russian CBDC for launch. If you don't live in Russia, you probably don't care. But it's coming everywhere. It's coming everywhere. Coming to a country near you soon. The Federal Reserve has launched a payment system called FedNow. Lets you send money in seconds. It's not a CBDC, by the way, but it is setting the framework for a CBDC. Federal Reserve of San Francisco now hiring a crypto architect for a CBDC project. We know the Federal Reserve has been working on CBDC for a while. We know it's going to be coming. 100%. 100%. Right now, almost half the world's countries are working on a CBDC release or have already released a CBDC or are about to release a CBDC. China's already had a CBDC for a year, something like that. And it's done a lot of volume already, and it's just getting bigger all the time. CBDCs are here to stay, unfortunately. Yeah. You know, the reality of CBDCs and why we're talking about them in the same breath that we're talking about Worldcoin, because it's all part of the same Orwellian dystopian future that awaits us if we don't pursue better alternatives. Because if we leave everything up to the governments and the corporations, this is where we're going to end up. Not in a pretty place. It's already not a pretty place technologically. We can make it better. We have the technological tools to make it better, but then instead of trying to build a better civilization for humanity, we all get distracted by hamster racing. That was the flavor du jour of crypto in the last week or so. Don't know if you blinked, you missed that pump and dump frenzy, but people were exploiting poor hamsters for racing. Anyway, Satoshi knew, which is why Satoshi built Bitcoin. And Bitcoin remains the strongest money in the world. The censorship resistance alone, you can send money to anyone, anywhere. Doesn't matter their politics, doesn't matter their gender, it doesn't matter their religion, doesn't matter what country they happen to live in. You can send or receive Bitcoin. Powerful stuff in a world of so much financial control, where the elites love shutting people's bank accounts down, love telling you how much money you can or cannot send out of the country. It's crazy stuff. But CBDCs are here, and they're only going to get bigger. CBDCs mean no privacy for you. I remember the head of the Bank of International Settlements? I think it was him who was talking the other day about $100 bill. He's like, this is a $100 bill. And this is a real problem because we can't trace this $100 bill. So when somebody buys something, uses this $100 bill, we don't know what they bought. Yeah, and that's okay, government. You don't need to know every time that I buy whatever, man. If I'm buying a bottle of water or a corn magazine or some cigarettes or a bottle of vodka or a stuffed animal, it's none of your damn business. But they want to make it their business. They want to make it their business. And CBDCs will mean absolutely no privacy. Now, look, person to person, like if I send you $20 of CBDCs, you're not going to see what I have sitting in my CBDC account. Unlike with crypto, if I send you 20 bucks worth of Ethereum, you can look at my Ethereum address and go, ooh, what's Lark got in there? But the government will know. Oh, the government's going to know. You don't think the government's going to know? Oh, the government's going to know. Also need more censorship because CBDCs will have an on and off switch. Like USDC and USDT, they have an on and off switch. Now, they don't really use them outside of cases of like hackers and stuff like this who've stolen money, and they'll freeze those funds. But this will allow the government to basically censor anyone anytime. Oh, we saw what you said on Twitter yesterday. Your CBDCs are now locked for 3 days. We can't have you spreading that kind of disinformation. Oh, you questioning the current medical response to a certain pandemic? Well, you're not allowed to question that. So we're gonna turn your money off for 3 days. This is the power of CBDCs, and it's scary stuff. And it's a lot more quicker and more effective than them trying to shut your bank account down or something like this. They can just turn a switch off. It'll all be automated by AI probably. And they'll just monitor what you say online, monitor what you say in the privacy of your own home because the apps on your phone are listening to you. You ever notice how you talk about something with your friend and then you get online later and you see an ad pop up for that thing that you were talking about a half hour before? Yeah, it's because your phone's listening to you. This is going to be the same thing. CBDCs will take it to the next level. And if you don't think that's realistic or going to happen, let me introduce you to China and their social credit system because that is exactly what is happening. Behavior correction, making sure that you don't do certain things or you do certain things. You'll get more points, better interest rates, better house mortgage rates if you conform. If you are doing certain antisocial things like saying the wrong things online, or maybe you're partying a little bit too much at the weekend with your buddies or whatever it might be, your score is going to go down a little bit. And of course, probably one of the scariest things is the expiry date of money, because when you have a $100 bill, as long as a bug doesn't eat it or you don't burn it or lose it, you got $100. And a $100 bill from 10 years ago is still worth $100. Well, it doesn't have the same purchasing power, but it's still worth the $100. You can still spend it. With CBDCs, they can do something like, hey, you have 90 days to spend your money, after which it just becomes invalid and it gets returned to the state and we spend it. So you have 90 days to spend your money. So get out there and spend. Now, that's going to, of course, mean you can put money into stocks or bonds or stuff like that. And maybe this will be part of the response to the failing US dollar and the $33 trillion in debt. Hey, just make people's money expire. And then they have to invest it back in government bonds, which are going to go to zero eventually, and invest it back into the stock market and whatever else it might be. And of course, they're going to say all this stuff is for your security. We can't have criminals using dollars and us not knowing where that $100 bill went. And of course, it's for convenience. Well, everybody's going to be using CBDCs. It's about financial inclusion for the most downtrodden in society. All this stuff. But we know these people are liars. We cannot trust them on CBDCs. We can't trust them on digital IDs either, unfortunately. And I don't trust Sam Altman and Worldcoin personally. Maybe I'll be proven wrong about that. Maybe Worldcoin is going to be the digital ID solution that is preserving privacy and does all the great things we want it to. But considering how ChatGPT already has a lot of political censorship, I'm not going to hold my breath on that. But the question for you, got Bitcoin? Now let's open up the floor to some questions before we finish up today's stream. So I'll spend next 10 minutes or so answering questions. So please feel free, hit me with your questions. As always, Super interested to know what you guys have on your mind. Let me take a hit of water here real quick before we do that. Oh yeah. That's good stuff. That's good stuff. So let me know what questions you got. Whatever it could be about whatever. You guys want to talk about altcoins? Let's talk about altcoins. You want to talk about bigger picture stuff, investing, money, government. Let's do it. Let's do it. The American Show X. What's up with XRP? Well, XRP, of course, they have got themselves in a great position because they got the clarity from the judges. Now, I'm still not an XRP investor, and I know people hate on me because I don't invest in XRP. It's fine. I don't want to invest in XRP, but I wish that your XRP bags go to the moon. And I think XRP, Ripple, the company, them winning their court case against the SEC is a damn big deal for all altcoins. So thank you to the team at Ripple for spending hundreds of millions of dollars fighting the SEC in court, because somebody had to take that battle, and I'm all about it. GT says, Lark, what is your beef with Filecoin? I have no beef with Filecoin. I have no idea what you're talking about. I'm just not super familiar with Filecoin. So I can't be an expert on all coins, man. There's 20,000 freaking cryptocurrencies. I'm invested in 15 of them or something like that. And I try to keep tabs on another 15 or 20 so I can have, some idea of what's going on in the markets. But yeah. I wish you all the best for your altcoin bags, my friend. I wish you all the best. I wish everybody to make lots and lots of money in this market. I honestly do. If you're making money, I don't give a crap what you're making your money on. Make the money, guys. Get out there. Buy whatever coins you think have value. And don't buy a coin just because you hear somebody talking about it on the internet, or don't not buy a coin just because I or somebody else doesn't have it. If you think it's a great coin, man, that's on you. Do your research. That's what it's all about. Okay. Second, Tim 32. Which crypto narrative will be the big winner this coming bull run? That's an interesting question, actually. And there's a lot of narratives that pop up all the time. But I think we're going to see a lot of the big narratives come back. I think we're going to see gaming come back and just rage back in a crazy way. I think we'll see metaverse come back. We'll see NFTs come back. All these narratives that we had previously will come back, and we're going to see new iterations of those. We're going to see gaming coins with like actual sustainable good tokenomics. We're going to see new DeFi iterations. We've already seen a lot of the major blue chip, quote unquote, DeFi platforms, doing new things, bringing in like makers, bringing in real world assets, and Aave's bringing out their stablecoin, or has brought out their stablecoin, and that's going to then return fees from the stablecoin back to Aave stakers. So it makes things a lot more attractive. So we're going to have a lot more iterations on existing narratives, and those will become bigger. Liquid staking, of course, has been like the big one this year. And I think we'll see a lot more liquid staking DeFi solutions coming out, more Ethereum staking solutions, more liquid staked backed Ethereum stablecoin protocols, DeFi protocols, lending protocols, all this kind of stuff. And of course, one big one to watch out for that hasn't really taken off yet, real world assets. Think about all the real estate, all the bonds, all the equities, the gold, the diamonds, all that crap that can come on chain, and it will come on chain. Larry Fink, the CEO of BlackRock, said himself that he sees the future of tokenization as being on the blockchain, and he's 100% right. I mean, he's just saying what we've been saying for years here on the channel, and other crypto analysts have been saying as well, is that we will see a massive surge of real world tokenization because it's going to bring more liquidity to those assets. It's going to allow those assets to be more international. It's going to remove the clearing houses that slow the process down and increase the fees for everybody. So it's going to be a good thing. That's going to be a good thing. What else do we got here? Some opinions on different altcoins. I'll hit those real quick. What do you think about reserve rights? I have not thought about reserve rights since I sold it in the last bull run. Wishing it all the best. Do you have opinions on Anchor? I have not thought about Anchor in any serious way since I sold it in the bull run before the last bull run. Wishing it the best and hope the token goes to the moon. VeChain, upside, downside for the next few years. I have not given any great thought to VeChain for quite a while now. I know we did an altcoin report on VeChain, I want to say late last year, maybe early this year, for the Wealth Mastery newsletter. But that's just because that's what we do in the newsletter. that wasn't saying like run out and buy VeChain or something like that. Just kind of, looking at the different the altcoins and breaking them down and giving you reports on them, so you have information as an investor in case this is something you're just investing in. But yeah, haven't looked at VeChain in any great depth for a very long time. Last time I think I made a VeChain video was like, I don't know, 2019, 2020, Gala Games. Similarly, we did make a report for this on the newsletter. So we had a report in the Wealth Mastery newsletter, the wealthmastery.io. If you want to start getting those reports to your inbox, of course. I'm not invested in Gala Games, and I have not looked into it in any great depth personally. So there you go. Again, wishing all your altcoin bags the best, guys. Interesting. Mako, can Chainlink ever overtake Ethereum? My guess is no. I would be very surprised if an application on Ethereum became more valued than Ethereum itself. That would be a fascinating phenomena. Now, I think Chainlink has a good potential moving forward. I've started to average into a little bit of a Chainlink position myself, actually. Full disclosure there. But I think Chainlink has some great potential for the next run. I think it's got a lot of big catalysts that have been forming up behind it. Of course, a big community of people who are very excited about Chainlink. So Chainlink's got great potential, fantastic technology, but I don't see it overtaking Ethereum. It would seem improbable to me. Maybe only, I don't know, in some wild blow-off catalyst because, I don't know, the United States government starts using Chainlink to do literally everything or something like that. I don't know, but that's probably not going to happen. But so yeah, Chainlink I think will do well in the next cycle, but it's not going to overtake Ethereum. Ricardo N, good question. Do you DCA the same amount in dollars each week, or do you DCA more when the market is dropping? It depends. It depends on what cash is there on the particular week. Usually around the same-ish amount. Sometimes, though, I will put in more, but usually what I'll do is I'll DCA in the same amount every week, and then I'll have the occasional buy order in if I think the markets are looking weak, for example, and I'll put in a nice, juicy buy order at a lower level of support. Like back when we moved down, when was that? 6 weeks ago, 8 weeks ago? I can't even remember now. Back when Bitcoin moved down to like 25,000, I think I had a buy order in at 25,200. It's been a while now. It's a couple months, so I'm not exactly sure of the numbers, but I put that buy order in. It was in for like 2 or 3 months. I put it in when the price was like 30K and just waited and waited and waited and did my weekly DCA. And eventually that bigger buy order got filled on a bit of a sell-off in the market. So it's kind of my general approach. Here we go. Jake from Pallet Town. Thoughts on Polygon? Polygon is an interesting one. Obviously, we all made lots of money on Polygon in the last run. I hope you made money off Polygon in the last run. We were talking about it from 3 cents up until $3 here on the channel. I think Polygon's got a great potential moving forward. I think the rebrand to the Pol token will be a positive for the network. And they're builders. They're builders. They've been building a lot of new technology. So I think they'll do just fine, honestly, in the next market cycle. So I don't currently own any Matic bags. That could change in the future. Big Polygon fan. Polygon's treated me well over time. So, there you go. But that comes back to my main thesis is that, I'm not married to these altcoin bags. Like all the altcoins I've been accumulating over the past months, like those are going to be sold, man. When the market goes crazy and I've got 10, 20x returns sitting there on some of these altcoins, click and sell, baby. Click and sell. Taking that money, running away. That's what you got to do with altcoins, because then the next bear market will come and they'll go down 75, 90% again, and all the usual stuff that happens in the markets. That's a good question. How much percent money do you still have on the side in fiat to buy crypto? Well, to buy crypto, it's a different equation to how much money is like sitting in the bank account. Money in the bank is money in the bank. And that's literally, I have it in like term deposits and stuff in the bank, just money that's like away from all risk, so to speak. Some of that money is also being used to reinvest in my business, my newsletter business, right? So we run ad campaigns and stuff like this outside of our social channels in order to bring more growth into the newsletter. So that's what some of the cash goes to. But if we talk about like just cash in crypto, so my crypto portfolio now is like 6 or 7% cash. And, it gets boosts every now and then. There's staking rewards. There's venture investments that I still get from like back in the day. I get some coins every so often from some of the venture investments I made back in like 2021, for example, and then sell those off for cash most of the time. Yeah, but I've been, it goes up and down. I use some of that cash for staking as well, or not staking, I should say, providing liquidity in DeFi pools. Got one on Trader Joe right now, for example, with the Euro USDC pairing. But yeah, I don't make any giant moves with that cash. I'll tend to just DCA a little bit into some coins over here, maybe throw a little bit of coins over there, something like that. But yeah, about 6 to 7% of my portfolio right now is in crypto only, if we're talking, is in cash. What do we got next here? Lark, what cold wallet do you use? We'll do maybe 1 or 2 more questions after this. Still using Ledger. I know Ledger had the whole thing recently, or everybody's, I don't know, burning their ledgers and yada, 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 because they are trying to make crypto more user-friendly for average people. Yeah, I still use my Ledger. I like my Ledger. I'm not going to change from my Ledger. I still think it's a great product. I appreciate their attempts to make crypto more user-friendly, even if they did a terrible job of trying to convey that message to the general public. Lucas T. Lark, do you share your bags? Yeah, look in the description of this video. I have a portfolio disclosure listed on the pinned tweet in my Twitter, and you'll always find it in the description of all my YouTube videos. So portfolio is there with all the cryptocurrencies I own, all the venture investments that I have, all the NFTs that I own. And one of these days, I'm going to get around, whenever I have some free time, I'll put my stocks on there as well, even though I basically never talk about stocks, but just for as much disclosure as possible. No, not that's like, if I tell you guys I've got some ARK stocks or something, it doesn't really make any difference. But anyway, just so you know, I'll put my stocks on there at some point in the future. It's on my list of things to do. I haven't had time to do that yet, but all the crypto stuff is on there, so you can find that in the link in the description. Okay, 1 more question, then we're going to end up the stream for today. What do we got here? See if my new question comes through. Otherwise, here we go. What's my biggest bag? Food with Angela. There we go. That's the last question for today. Food with Angela. Biggest bag is Bitcoin. Bitcoin's 50% of my portfolio. Ethereum is 25% of my portfolio. If we talk about altcoins, probably top 5 altcoin holdings off the top of my head is going to be Moonbeam, eGold, Avalanche, Polkadot, Trader Joe, Arbitrum. That's 6, I guess, but those are all like between 2 to 4% of my portfolio. So a lot of money in big blockchains, a couple in some protocols like Trader Joe, but a lot of it just in blockchains in particular. But yeah, 75% of my portfolio is just Bitcoin and Ethereum and stable coins. So there you go. Anyway, that's it for today, guys. Thanks so much for joining this stream. Thank you so much for hanging out with me. I love it. I love you guys. So thank you so much. It's an honor to get to talk to you and to talk about crypto and have you guys come along for this conversation. So absolutely love it. Thank you for your time today, and may all of your investments bear massive gains for you in the coming market cycle. Peace out.